Hey, welcome to the closing beat, everybody. How's it going today? You know, one day we should actually leave the mic on before the show and let people hear what that's you. Let people hear what we talk about. Be probably kind of funny. Hey, welcome to the closing beat. We are financial advisors here at Jazz Wealth, and we do this show every day here for you guys to talk about the stock market, not from an opinion standpoint, but to share data with you, share something that maybe helps you learn. We are teaching advisors out there, and we share this with you because most advisors can't do it. I've had advisors ask me pretty much on a weekly basis, how do I set up a show and do all this? And I'm like, do you know anything about this? No, Dustin, I sell stuff. That's my job. We don't sell stuff, which leads me to one quick point, and then I'm going to get into everything today. You're going to learn something great. If you decide to join us here at Jazz Wealth, we're a little bit different. Your plan, I'll help you make a plan. We'll come up with what you're going to shoot for, and then I assume we're going to follow that plan. And if you decide that you are going to mess with that plan, you are messing with my plan because we don't sell anything. So the only way we grow is if I make you hit your plan. And so if you try to change your plan in a way that is going to hurt your plan, and I can share that with you and show you that, then we're going to have words, because if you hurt your plan, you hurt my plan, which means you hurt us. And my job is to make sure you keep your dough straight. So I had a customer that I swear to God, I heard The Godfather in my head, because he said, you know, people don't normally talk to me that way. That was what he said in his email, and I was like, oh crap. Like, I never met this person, but and he said, but I appreciate it because it got him back on track. But I was pretty tough on him, right? Because, you know, you're messing with stuff, which messes with the company. And so, you know, I treat everybody's money as if it's my money according to your plan there. So just know, if you need a little tough love, I'm all good to dish it out to you there. So, hey, anyways, let's get started today before I get myself in trouble. Go guess the Dow. Take a shot, will you? jazzwealth.com/guess the Dow if you want to play. $100, no strings attached. If you can guess the Dow close without going over, we'll win, and we announce those on Fridays there. Next week's going to be a little bit of a light week because it's the holiday week. The stock market's going to be a little bit quiet. You can already see it slowing down here for the holiday. So we may do the show on Monday, but probably taking some time off there just as a heads up if you don't see us. Let's get started. Going over to the, well, start with the NASDAQ, actually. We'll go over to the NASDAQ. That was your leader today. A little bit of a recovery. We talked about that yesterday, that you could probably see a little bit of a relief rally starting in the NASDAQ. I didn't know that it would happen today, but I'll take it. It's edging back towards the 40% year-to-date mark. Well, today basically was just small bounces in the FANG names. I think Facebook put up 1/3% in there. You can see it. Microsoft about 0.5%. Tesla continued a little higher today, $2. It's at new highs there. So a little bit of that FANG tech stock play there helped out the NASDAQ. But remember, it's up 40% year to date. Is that odd? Remember when we talked about this before? I like showing things that are odd. In fact, the NASDAQ being up 40% year to date is actually very, very odd. Here's the last 20 years. I'm one little move up off of this here. So going to the 40% mark here, if we were to look back all the way to previous times when it was up 40%. You got to go to 2010, late 2004, all the way to the year 2000. It's only been 3 times that the NASDAQ has actually posted gains of greater than 40% on the year. And so for it to be getting close to the 48% is actually really odd. That tells you that we're likely a little overbought. In fact, you could draw lines here at the 40% positive, 40% negative down here, and you could very quickly see that for the NASDAQ, 40% up is overbought, 40% down is oversold, and maybe that's an interesting place to look. Average gain, at least over this time frame, 5.25%. So obviously we're doing better than average. Nobody's complaining yet, but if the markets do pull back at some point, it'd be totally acceptable. Nobody would really care. Well, if you knew the data there, and part of my job is to give you the data so that you can get rid of your emotions in this game, because it's hard enough as it is. Going over to the, well, let's do the Dow. A little bit of a pullback here, up 5% year-to-date still. Salesforce was your leader today. Salesforce.com broke out of that downtrend. We just talked about it yesterday, the idea of the higher low. Remember, it was on our watch list. Broke out there, looking good, is your biggest contributor in the Dow today. Also, Walmart had a decent day, up 2% on the day, and United Healthcare, I think, was your biggest drag, at least when I looked, and still is 2% on the day, pulling back after the little Monday pop there, getting back on top of some support. For a healthcare stock here on this technical support, starting to look pretty interesting there. We'll probably talk about that a little bit more as the days go by. If we go over to the S&P 500, still holding on to double-digit gains this year, actually 12%, it's not bad there. Today, thanks in part to tech stocks. Tech stocks did okay today. They were the biggest contributor in terms of the gains today. Like I said, the FANG stocks, you got Microsoft in the mix we talked about already. Alphabet or Google had a decent day, 1% higher. Apple as well. These all helped kind of just keep that NASDAQ in line, but also be the biggest contributor in the S&P as well. Honorable mention to Wells Fargo. Good job, Wells Fargo today. Coming off the lows, building momentum and gaining attraction in terms of volume and investors willing to give Wells Fargo a shot. They had some kind of interesting program come out today, digital checks or something like that. It didn't seem interesting, so I didn't read through the whole thing, but best financial stock of the day right there, so looking pretty good. Hey, tonight, if you're one of our customers, our Wine and Wealth, we have quietly, and not making a big deal out of it, but we've been building all kinds of cool stuff for you today. Tonight, I'm going to share with you the first thing that we're launching. We're going to go over how it all works, show you inside the dojo what it looks like, what you can use it for, and I would just say hang on tight, right? I'm going to maybe share, if I don't get in trouble, I'm going to share something that we're working on that will help you eliminate the emotion in your investing with us or your trading if you happen to be a trader. And you know I don't just go like talking about stuff that it's going to be cool and then it's not cool. Wait, just tonight. That's what we're going to do. All right, FinTips videos this week. Withdrawal rate if you had $1 million. What's a safe withdrawal rate? And no, the answer is not 4%. Yesterday, what if you're forced to retire early? Talking about that today. And then tomorrow, if you're interested, we're going to go over stock market performance statistics based on the outcome and the election going forward to see what to expect there. Research site, cool posts going on there too. If you want to check out the research site, can't be a customer, jazzwealth.com/research. Really, really cool post there. And we're working on something that I promise you, you've never seen before that will be posted in the research site. It's an interesting statistic that you never would guess. And we're putting it together right now. That'll be in the research site. I shared it with customers like a year or so ago, but it still holds true to this day. It's something that most people would never think about doing, but it's an interesting strategy. I'll tease you with that. We'll move on over to the sector breakdown here for the day. We're going to have energy. Energy moves back up the list here. I'm going to use our new little tool. We'll go to energy. It's one-day performance, 1.6%. It also is the best gainer over the last week. It's going to be 2 weeks in a row that energy is your better performer there. Today, if we look inside of energy, it's going to be because of Chevron. And then I'm going to just go like this and sort by contribution. Kinder Morgan, out of nowhere. It only has a 4% weighting in the energy space, and I didn't mean to click on that, sorry. But yet was responsible for 21 basis points inside of the energy sector today. Kind of interesting. That doesn't normally happen. You've got CVX in the mix, one of your biggest contributors. That's going to be up here, looking good as well. Largely just a positive day. You can see by our little scatter plot that Baker Hughes was the only weak one on the day. Maybe some news or something driving that one there. You still have this sector rotation. Now, you can see it here a little bit. It's not as obvious today, but money going into energy and energy, money going into energy, and let's just do it this way. I want to do it this way. Yeah, hang with me. This is going to be cool. Okay, here is a direct chart of money moving from one sector to the other. This is just as simple as it gets. We show money moving out of energy, right? So this is money leaving energy, and where is it going? Into communications services, the communication services sector, right? Now what's happening? Just in the last couple weeks, you have money coming out of communication services going back into energy. So a little bit of a perk up there. All I did was plot these two together to show the money leaving the energy space. That's our primary focus on the chart. Going into communication services. Now we have a reverse of that happening. Well, in the tech space, I've been saying this every day. It's nothing new to some of you, right? In the tech space, money's been leaving the financials and going over to tech. All throughout this part of the year. You know, financials, these two have been the weakest sector, financials and energy, right? Well, all of a sudden lately, financials, you know, is waking back up. I keep pointing that out, and it's moving over to the tech sector. So you can actually see the money moving. It's just a real simple way to break that down. I wanted to share that with you, something very simple to point out, but anyways, that's what you have there. We go over to financials. I want to point out something here today. I'm going to change this guy to quarter to date. We're going to go to 6 months out here just so we can see. Check this out. If you sort by return, quarter to date. There you go. So if you sort by return, we can actually see the weakness in the exchanges. You know what I'm talking about? So I've mentioned this a few times, how in the financial space, the exchanges were strong, then all of a sudden they start fading away a little bit. Now they're the weakest. Got a little profit taking going on there. How can we tell? Check this out. If I go backwards, sort by returns here. We know that if we look down here at the bottom, you could see those red dots on the scatter plot. Well, check it out. If I just go like this and I say, okay, let's look at S&P Global. Now it's going to be in black on our scatter plot up there. And look at everything else here down at the bottom of the list. Those exchanges are the weak area of the sector. How cool is that to be able to see where the weak area is so far this quarter? It's new, right? We're halfway through the quarter, basically halfway through the quarter. So you've got weakness in there. You got weakness in Moody's. You got weakness in the CME group. That's all these guys down here. Look, Moody's is in there. You got AON. Where's NASDAQ is in there. CME or CBOE, there it is. These are your weak performers. Where's all the action so far this quarter? Look up here. You're going to have it in your banks, not the biggest banks out there, but banks and insurance. You've also got the investment managers, Invesco, in the mix as well. Really, really cool. Something I wanted to highlight there for you. We can do the same for tech, by the way, since I've got a second here. If you want to go over to the tech sector, you can see that Intel is the weakest in terms of the semiconductors. So we go to quarter to date here, go like this, we'll pop this down. Intel's just been beaten up. These poor guys. Just been beaten down. But look, Intel, the weakest of all the semiconductors. The semiconductors have been really strong, right? So it's just Intel that's dragging the ship there a little bit. Thank God it's not a bigger weighting. But look up at the top over here. All your other semiconductors really, really strong there. And in fact, if we were to take a look, you got names like QCOM up here, Micron, AMAT is one of them, ADP, Xilinx, all the stronger semiconductors. So real quick, if you're looking in that space, you know you can avoid Intel, or if you like buying a discount, you can look at that. But you know those are the weak areas there. So really, really cool. Just something I wanted to share with you. Anyways, looking at the sectors again, utilities at the bottom and healthcare continues to be weak. You might have guessed that because of United Healthcare and everything that we just showed a second ago. In fact, if I could just hop over there real quick, I'll go to 6 month here. We'll look at just the day today. And you look at some of the weaker names on the mix there. You got Cigna, Humana, United Healthcare. Your weakest stock with the biggest contribution to the declines today is right here. Very quickly, you can see it's United Healthcare. So I honestly didn't even know that before I looked at this. Just very quickly, you can see, because what you're doing is going over in terms of weight and then down in terms of returns. I'll cover it tonight a little bit for you guys. All right, let's go away from our little tool here and go to the watch list, actually. Take a look and see what's going on today, because I tried something a little different. I don't know if this is something you want to look at, but you guys know that the value stocks have actually led the way in terms of the market rally here this quarter. So if you go back and you plot quarter over quarter, you're going to see value stocks are the better performer compared to the index funds and compared to the growth funds, things like that. Which, by the way, I was trying to put this data together last night. You know, all of you that are saying, you got to just buy the index fund, man. Just buy the index, buy the index. We all know, now Wall Street knows as well, that you all are changing your minds, right? The data actually shows you guys are not playing with the indices anymore, and you're buying individual stocks. And I was going to try to break down for a research post exactly where your money's going. So there's no hiding anymore. We know what's going on over there with you guys, and especially Robinhood, things like that. Anyways, let's dive in. We're looking for value stocks here today. What we did is we said, well, even today, value was the leader, right? Small cap value, small cap or mid cap value as well. All the leaders today. So with that in mind, we took the S&P 500 and we said, let's look through the value stocks in the S&P 500. There's a lot of them, so I tried to find additional criteria to break this down for you. And I'm going to go a little bit geeky. Do you mind? Do you mind if I just do this here real quick? Let me see if I can pop up what I need to pop up. Value stock scan. Okay, we're going to go back over here to the watch list. This is the full list. Yeah, you can see it. Looks just fine. But what I did is I looked through the value stocks, realized there was a lot of them, and I said, okay, here's what we need. We need the price to be over the 200-day moving average. I don't want to see it if it's not, meaning I want to see stronger stocks overall. I want to know that they had the best returns so far this quarter, because it's a watch list that we're coming up with. We're not looking for stocks to buy right now. We're looking for stocks that we may want to put on a watch list and track. So I want to know the stocks that had the best returns this quarter in the value space. I want to know that their year-over-year profit growth is also positive. Preferably, I'd like the best, but I'd like to see the ones that have made it through this virus with an actual increase in their overall profits. That could be for any reason, by the way. It could be that they downsized, they fired people, they closed plants, whatever it is. I'm not like picking on that. I just want to see that they had a greater profit overall compared to last year. I also want to see that next year earnings are expected to grow. That's it. I need to see a positive number over here. If the number was negative, that would tell you earnings were expected to move a little bit lower. So today on the watch list, all the way over to the far right side of your screen, I am showing those that are on this list that have the best year-over-year profit increase. You could choose any criteria you want. You could stop here, freeze the screen, snapshot it. I'll even go over here so it's a little bigger for you. But I'm looking for the best profit growers year over year, and those are the stocks that we're looking at today. So if I take you through it, what we're going to have is Baker Hughes, 11% profit year over year. They've done well this quarter so far. Month to date, they're up 30%. That's fine. I mean, it's been a bigger mover because it's in the energy space there. You got Invesco, right? These guys do what we do, only they're just a little bit bigger than what we do. 15% profit growth year over year. That's just going to be on asset fees right there, the products that they sell and things like that. Earnings expected to grow next year, and I believe that, actually. Howmet, so we go over here to Industrials, aerospace company, up 40%, 13% growth year over year. It is above the 200-day moving average and expected growth next year. Found this interesting. Expedia, beaten down a little bit this year, but starting to recover. You know Expedia.com. Up 34%, profit growth 7% year over year. Like that one as well. And let's look at, I'm going to do this while we're at it. Go over here. Let's take a look at where the charts are. So we got a little pop off of the earnings there and continuing to hold up near highs. That one looks nice and strong. Corteva, let's do this so you can see the actual name. There you go. Corteva just shy of new highs. Very strong rally over the quarter so far and over the last month. So looking good there. Go over to CenterPoint Energy, recently pulling back. I kind of like that this is happening where you had a stock that just haven't looked at, that's had a nice rally, and it's just pulling back now. I like that. I don't want to see a stock right at the second you got to make a decision there. Oh man, that is my fault. Charlie, you're up. Who's going to be the one to make the next noise there? Anybody? You want to know who it is, by the way? It's the DMV in Michigan. It says DMV, Michigan. I haven't been to Michigan. Okay. Anyways, CenterPoint, that was the other one. And DaVita, these are dialysis clinic here, getting a lot of attention lately because they've done really well through the virus, being able to keep patients coming in and not having to shift to the at-home stuff so much. So DaVita looking good in there. And just to take you back over here, I want to show you real quick. You got DaVita on the mix there, 32% year over quarter to date, above the 200-day as you just saw, and 8% profit year over year. That's a steady grower, by the way. It's not one that's very volatile, just so you know. It's a pretty consistent business. Not a large profit margin there for the most part, but I just happen to know a little bit more about that one. And that's your watch list for the day, something a little bit different for you. Interesting? Not interesting? I could do other stuff. I could talk about this stuff all day long, but you tell me. All right, let's move on to stocks in the news, see what we got here. There's actually a couple things going on, if you're interested. Do this here. I'm going to pull this guy over here. There we go. All right, so Sonos, did you see that? 30% gain in a day, right? They were getting kicked out of the Apple stores and was like, oh man, it's not going to be good for them. They report earnings beat by 18 cents, raised their guidance. They're very happy about the future and excitement there. So much so that they're going to spend $50 million buying back shares. Amazon, little gain on the day there, scratching a bunch of jobs in the drone in the drone program, drone delivery program. They're getting rid of some jobs there. I think it was 2-3 dozen the people getting fired there. Speaking of fired, AMC's firing 10% of their workforce. I'm going to bet you that that number goes up. So don't think the worst is out of the way, I think, for AMC. If you lost your job at AMC, you might go to Starbucks, because if you've been there at least 3 years, they're going to give you a 10% raise. If you just go there and start working now, you're going to get a 5% higher pay than you would have just the other day. So Starbucks with a little bit of a pay bump there. Was it 5%? Yeah. Baristas are going to get 10% more if you've been there 3 years or more, 5% more if you're just starting. All right. They do that a lot. GoPro. You see the stock down 13% there, issuing $100 million in short-term debt, which converts to stock if they want to do that. Stock's higher, right? What's the old saying? I should make a shirt. Raise money when you can, not when you have to. Good job, GoPro. Whether you agree or disagree, that's what you got. Tyson's got earnings. Really, did well. It was a good earnings. A little weakness in the chicken space. The meat offset it in terms of their production. Not bad there. The issue, I read through the transcript, the issue was they're concerned about higher costs to maintain their operations through COVID. They're worried about that getting worse there. So they put up some numbers that were a little bit higher than they should be. And lastly, Limited Brands. Limited Brands, look at that one. That's the best performer in the S&P today, up 17%. So I'll let the stream catch up here for just a second while I try to do something that maybe I shouldn't do. I'm going to try it. I'm actually nervous here. Let the stream catch up. How many times has Limited Brands, do I have to type capital? He's not even paying attention. Limited brands in one day gained more than 15% over the last 20 years. Is it going to work? Limited brands has gained more than 15% over in one day 6 times in the last 20 years. You got today. You got July. Hey, check that out. You got July of this year, so it picked that up. That's a 35% gain. You got May, so 5 times that this stock has gained over 15%. It did it this year out of the last 20 years. That's impressive. One time was back in 2008, gained 21% in one day. Wow. So it's had more 15% gainers in just this year than it's ever had. That is something else there. The more you know, right? About that. All right, let's see what I can do for questions here, and then I'm going to get ready for our class tonight. Do some good stuff there. Cool. Got a couple lawsuits going on. They had a little betting game going on at Tyson. I'm not going to get into that, but apparently the employees had a little bit of a bet going on. That was also frowned upon. But we moved on, right? Yep. You wanted to buy limited brands but forgot the stores are hopping. Bath and Body Works, that's where they're killing it at right now. I know Victoria's Secret's had their issues. They're doing better. The inventory issues are all mostly behind them. But Bath and Body Works, candles, sanitizers, things like that. Yep. Awesome. Nice. Good job, Miriam. I love it. You learn something every day. That's all I ask, right? Well, no, I mean, I guess I'd ask if you'd hit the subscribe button too. That helps. You know, like button, it's fine. But if you learn something, I'm happy with that. That's the goal. If I teach you something, you're more likely to ask a question. If I get you to ask a question, you're more likely to tighten up your dough. And it's important, more so than ever. Yep. I think if you're playing the FDA approval, you might be priced in already. For Pfizer, I think that was priced in the other day. Kind of an Apple result. Buy on the rumor, sell on the news sort of thing. But we may know tomorrow, actually. I mean, it could be that soon with the emergency filing that they did. Yep. I love it. That one's next. Charlie. You got so far away from the moving average. Right? That's good. Yep, I love it. That's awesome. Miriam, how much to become a client? You can pay me as much as you like. It's fine. I would know. We don't charge you to become a client, of course. You can join. Minimum account size is $2,000. I have to say that, but we don't have like a fee to join the group or nothing like that. Yep. You like work for signs of a breakout today. So the question is, do we think we see signs of a breakout? You can't say breakout here. I'll tell you why. Technical traders won't say breakout. You could say a break of a downtrend in the works, hopefully. This will click. There you go. This is really what you're looking at here. So your first sign that you would maybe be about to break this downtrend, just like Salesforce. Use Salesforce as your model. First sign would be a lower high. We don't have that yet. So what that means, and follow this going forward. Let me know how this works out. The first sign would be a lower high. So you know right now that this stock is not going to break beyond this downtrend and continue higher without pulling back. Won't happen. I'll bet you guys 2 extra guesses on Guess the Dow or something, right? What's going to happen is it's going to try to move up, pull back, and that's your chance to see a higher low. From there, now maybe you got something, right? So that's a crude drawing of it, but that's what you want to look for, and that's what's going to happen there on work. Just like Salesforce. You got to see that higher low first. See how you got the higher low here on Salesforce? That lets you know that the selling pressure is done. Right? You can't make that argument on the way back up to the downtrend. You make that visual verification when it pulls back, then you go have a good time. So maybe a little bit more than I usually cover there, but hope that helps. Yep. I love it. Roku went bonkers. That's a new term. Roku went bonkers today. I believe it got an upgrade earlier in the day. 1 or 2 upgrades, actually. May have gotten, I see 1 off the top of here. It looks like 2 upgrades today, hitting new highs. It's not extended, so you can say, yep, it's got a chance to keep going. This was extended right here. See how it gets pulling away? Takes a break for a while. Now you get a new move. That's good, right? So I have no problems with Roku. Also know they're doing well. I mean, I'm happy for them. I think I use a Roku. I don't know. I saw Alibaba today. You got your little bounce so far, so that support area kicking in there. We talked about this one yesterday or the day before, saying this is about the range where you'd likely find some support, not for the bounce that takes you back to highs, by the way. Should probably clarify that. Your little short-term bounce, your scalp, your short-term trade there is probably what this is setting up for right now and hopefully doing. Yeah. You like the technical trading stuff? See ya. Hey, I'm going to get ready for our class tonight. I kid you not, we're working on so much and stuff that we can actually let our customers use and be a part of. Right now, in the last couple of years, we've just had to kind of do our thing and share the information with you. We're making it where customers can take it and run with them. So nobody's doing it, I promise you. Nobody else is doing this. I'm going to share some of that with you here tonight and what we're going to be expanding on, get some ideas, feedback, things like that. Come grab a drink, hang out with me here tonight. Be at 8 o'clock Eastern time. I appreciate you guys watching. Have a great rest of your day. Hope you learned something today. Adios.